Inflation and interest rates aren't dropping anytime soon. This could hit your wallet harder and longer than you think. Here's what economists are warning right now. A survey conducted among top economists reveals a consensus. Inflation and interest rates will be higher for longer than previously thought. This reflects persistent price pressures across key sectors and cautious central bank policies. Unlike short-term spikes, these elevated rates could linger for years, affecting borrowing costs and everyday expenses. The Federal Reserve's approach to combating inflation is more gradual, signaling no quick return to the low-interest environment many hoped for. If you're planning to take out a mortgage, buy a car, or use credit, prepare for steeper costs. Higher interest rates increase monthly payments and the total amount you pay over time. This could slow home buying and reduce disposable income. For businesses, expensive borrowing might delay expansions or hiring, potentially impacting job growth and economic momentum. The survey highlights ongoing supply chain disruptions and resilient consumer demand as key reasons inflation isn't easing quickly. Even with central banks raising rates, these fundamental factors sustain upward pressure on prices. Energy costs, housing shortages, and labor market tightness contribute to the persistent inflation environment, challenging policymakers and consumers alike. On the upside, higher interest rates offer better returns on savings accounts and fixed-income investments, a win for savers who struggled with near-zero rates in prior years. However, stock markets may experience volatility as investors adjust to the costlier borrowing environment and slower economic growth. Diversifying your portfolio and staying informed will be key strategies in this climate. Looking ahead, economists predict a slow and steady path rather than rapid improvement. Central banks will likely continue measured rate hikes or maintain current levels until inflation shows consistent signs of retreat. This higher for longer outlook means individuals and businesses must adapt to a new financial reality that could last well beyond 2026. The takeaway: expect inflation and interest rates to impact your finances longer than you might want. Higher borrowing costs, tougher budgeting, and cautious spending are on the horizon. Stay vigilant, plan for these changes, and subscribe for updates to navigate this challenging economic landscape.